these financial statements, there are qualitative characteristics which have been defined in the accounting standards framework. Now, this framework says that whenever you will prepare these financial statements, you need to have information which can be understood by anyone. So when they say anyone means not only people from commerce background, but people from science background, medical background, other people also, they should be able to understand. And that's why they are bringing in a new standard of accounting where the way balance sheet is prepared is going to undergo a change. So this IND AS 118 is going to come very soon. I'll talk about what is this IND AS and what is this, these are accounting standards. Then the framework also says that relevant information should be there in the financial statements. So if a company is very large, there are thousands and thousands of employees which are working. If some of these employees have superannuated in the current year, how much relevant it will be to know the name of those people. But if in the same company, thousands of people working, but there are two board members which have resigned, how important it is to know that why these people and who are these people who have resigned. So you see the relevance. So the framework says that relevant information must be there, in the financial statements. All these financial statements need to be reliable. That means so many people will put their signatures under the balance sheet, profit and loss account, and these people will be director, will be CFO, will be the company secretary, will be even the auditors will be putting their stamp and say that, okay, this is as per our audit report attached, and they will also mention the date of the audit report. And in the audit report, they will give a complete opinion in which they will say that, okay, it is responsibility of the management to prepare these financial statements. What we have done as the auditor is to apply the auditing standards, and we looked into these numbers which have been mentioned, and in our opinion, they are not having any material misstatement. Materiality is very, very critical. If a company is, let's say, 50,000 crore, and if there are some mistakes by the company which is into 500 rupees or 700 rupees, so auditors say that, okay, I have looked at it, and material misstatement is not there, and these financial statements are giving true and fair view. True and fair view. It's not, the auditor will not say true and correct. They will not say that it is 100% correct. They will say that these financial statements are giving true and fair picture of the profitability of the financial position of the company. So what we follow as per the accounting standards, what this framework says that in India, we will follow substance over form. So that means transaction can be of any kind, but how the accounting will be done will be based on the substance of the transaction. So if somebody is giving money to this company, company has received money, for what purpose the money has come? Whether it is after there is a sale of stock, whether they have sold out their own property, whether the company has taken a borrowing, whether the company is got an investment, how this money has entered into this company, that transaction will be recorded according to the substance. So this is one of the critical characteristic, one of the qualitative characteristic. Numbers need to be comparable. So with whom? With what? So every financial statement will have previous year numbers also along with the current year numbers, so that you can have a comparable number. So if company is saying that we made a very good sale of 20,000 crore rupees. So in isolation, it doesn't matter. But if the company says that previous year it was 18,000 crore, current year we have done 20,000 crore. So that means there is a growth. But if the company says that, okay, previous year we were having a turnover of 40,000 crore and this year we have 20,000 crore, you will see that, oh, what happened? Why 50% cut in your sale? So only saying a number doesn't mean anything until and unless you compare it with someone. So this comparability is a critical point here in the financial statements. Every number, it is important to give the previous year number as well. Then a concept of prudence is also followed in our accounting, where they say that, okay, if the sale has happened in the current year, purchase has happened in the current year, we put it in the same year. And then we will also follow accrual system of accounting.